Ladies and gentlemen, the torch has officially been passed at Berkshire Hathaway, and Wall Street just gave Greg Abel a passing grade. After decades of Warren Buffett commanding that Omaha stage, the question on every investor's mind wasn't just about succession, it was about whether $300 billion in market value could survive the transition. Well, Abel just faced his first real test, and the verdict is in. So here's what happened. Greg Abel, Berkshire Hathaway's CEO since Warren Buffett stepped back from day-to-day operations, hosted his first solo annual meeting in Omaha this past weekend. For those who don't know, this gathering isn't just another corporate event. It's been called the Woodstock for Capitalists, where 40,000 shareholders hang on every word about insurance, railroads, and the art of patient capital. Abel took questions for 5 hours straight, addressed everything from BNSF Railway's performance to Berkshire's massive cash pile, and fielded concerns about how the company's culture survives without its legendary founder. Longtime shareholders and institutional investors walked away impressed. Not ecstatic, not worshipping, but impressed. And in a world where CEO transitions often crater stock prices, impressed is actually exceptional. Markets are responding with cautious optimism. Berkshire's Class A shares are holding steady, trading in a tight range since the meeting, which tells you something important. No panic selling, no exodus of long-term holders. That stability matters because Berkshire is the seventh largest company in the S&P 500 with enormous stakes in Apple, Bank of America, Coca-Cola, and American Express. When Berkshire sneezes, tech and financials feel it. The real signal? Berkshire's operating companies, from Geico to Dairy Queen to precision parts manufacturers, reported solid earnings, and Abel demonstrated he understands each business intimately. That operational depth reassured institutional investors who control massive Berkshire positions. Meanwhile, the company's $150 billion cash hoard remains untapped, suggesting Abel won't make impulsive moves just to prove himself. Bond markets barely blinked, treating this as a non-event, which is exactly what you want during leadership transitions. Now let's talk winners and losers. The clear winners are Berkshire's operating subsidiaries and their employees. Abel signaled no fire sales, no radical restructuring, just disciplined management of railroads, utilities, insurers, and manufacturers that employ 380,000 people. Financial sector investors also win because Abel reaffirmed Berkshire's commitment to its massive bank holdings, providing stability to stocks like Bank of America. The losers? Private equity firms, hoping Berkshire might divest businesses under new leadership, won't get easy pickings. And active fund managers who bet against Berkshire during the transition just saw their thesis weaken. If you shorted Berkshire thinking succession chaos would crater the stock, you're now underwater. Globally, this matters most to American markets since Berkshire is quintessentially a US-focused conglomerate. But Japan is watching closely, given Berkshire's significant investments in Japanese trading houses. Europe's insurance sector is also paying attention because Berkshire's reinsurance operations set global pricing trends. Emerging markets feel this indirectly. If Berkshire's steady hand keeps US markets stable, capital flows to developing economies remain predictable. For jobs, this is unambiguous good news. Abel's performance suggests no mass layoffs or portfolio pruning, meaning hundreds of thousands of American jobs across railroads, utilities, retail, and manufacturing remain secure. Real estate implications are subtler but real. Berkshire owns significant stakes in home builders and building materials companies. Abel's steady leadership means no disruption to housing supply chains or construction financing, keeping one element of the real estate equation stable during an otherwise volatile period for property markets. What to watch now? Berkshire's next quarterly filing will reveal whether Abel made any significant portfolio moves. The real test comes when markets turn volatile. Does he deploy that cash mountain wisely, or does he freeze? And watch shareholder retention rates over the next year. If institutions start rotating out of Berkshire, that's your early warning signal. Stay informed, stay ahead. This is World Financial News.